All right, we are back. Apologies to everyone who came in here. We had some audio and technical difficulties. And so we're going to be picking up talking about the 3 trades of the week. After that, stick around. You're going to want to hear from Ben Lilly. He's going to be showing up here and breaking down some questions we've had about how to unlock alpha using Panda Terminal. I'm excited because I think it's the first time we've been able to dig into some of the metrics that he's going to be sharing today, and really starting to get into a deeper level of understanding with everything that platform provides. So it's going to be super exciting. But first, we are going to be walking through some trades like we do every week, and we'll be putting out a part of the conversation that unfortunately we had to take offline, really thinking about what just happened with the volatility of the last 48 hours and how to start to think the trade. Really a lot of great lessons here, and it actually plays into this part. So you're going to want to check out that video. But this is all about what are we seeing from a trade perspective this week. So Benjamin, I want to kick it off to you. Starting off, we're looking at Bitcoin. I looked at the numbers this morning. It was trading about 99,500, maybe down a little bit now. Ethereum is at 2,800. Solana at 212. And again, we just had that volatility, I think, where Bitcoin dropped from like 105, 106 down to 93. Last week, the story was all that we're not seeing any kind of real conviction in where Bitcoin is going to go next. January had been kind of a pretty soft month. Now we're heading into February. You didn't see any signs from an order book perspective or just flows that we were going to see a pickup. Obviously, we saw a sell-off. Has any of that changed? Are you looking for trades this week? What's your thinking there when you look at Bitcoin?
I think it is still patience time. We just did some massive volatility, right? Around 15% range of volatility that we pulled it off. And I think everybody's looking for clarity, but this is not just something about charts. It's also about the amount of liquidity that got pulled off the market from the order books. And the spreads got blown up as a result yesterday morning. So a lot of repairing work is going on, and we need to let it breathe a little. However, that being said, if it still goes back down all the way to low 90s, as far as Bitcoin is concerned, it's still a bid. It's still a bid until you lose 88K and the December lows, and that's when you throw in the towel. I don't think you throw in the towel on Bitcoin until then. I don't think you have to FOMO at 100K every single time either.
Okay, so still a good time to be patient in the market, and Amit may have more specifics on the trade side of it, but
yes, because if you see, I know Amit will go deeper into the range, but we have basically been ranging for nearly 1 month and 1.5 months now, nearly 45 days now, and everybody's trying to look at a better resolution out of this. But I don't think we are ready yet. So, take it a little bit slight on leverage.
So I want him to answer a little bit of this, but tell me who wins when Bitcoin is ranging like this? Is it an opportunity for people to harvest some of that yield coming from perpetuals? Because it's a lot of times that can start to kind of compress a little bit, so it's not as you don't earn as much. Are there others that are going to be looking at this maybe as an opportunity to secure some longer term loans? Like who benefits during this period, and what might the trade be that they're taking during this patience period?
So during the ranging period, it's typically LPs who make very good returns because you have a much defined range, and you know in what range you have to provide liquidity. You know what is the cycle that price is trying to follow, whether it is 15-day, 30-day, 45-day, or 60 or 90. So you're able to time things accordingly. Ranging markets are good for a lot of LPs because it's more stability for them, and they're able to measure their risk. But what happens during the ranging market is also that the volume goes down as the range keeps going too long, because the market participants are now bored, or they are having no clue whether the 17th touch of 90K, whether you should buy it or not, right? So people start going into sidelines, and volumes drop and returns drop. When returns drop, liquidity gets pulled out. When liquidity gets pulled out, you see a price action happen on either of the directions, depending on who's the dominant force. And then you get a resolution out of the range. This is typically the psychological plus data oriented behavior that happens.
Okay, so that's one path, and definitely, like as you said, the LPs are going to be happy here, even though the volume will finally shift down. If we're heading into a period that we now expect to have more volatility, and it could be kind of macro driven, similar to what we saw in the last 48 hours, who's going to benefit from that? And how would you think about positioning if we started to see that happening on a recurring basis?
Something like yesterday, or in the sense, like I think the past 72 hours is
Mhm.
quite unprecedented, right? We have had a lot of moves in the past, couple of months due to bad news and good news, but this has nothing to. This was much more serious. This was much more plausible.
Mhm.
The tariff-driven price action, and it was more believable that President Trump would go to extremes to cause a lot of damage to counterparties.
Mhm.
So um, the fear was not completely unfounded, and I don't think anyone should say that it is obvious that he was going to roll back. And it's fair, a lot of people wanted to risk off, and it's fair, a lot of market makers pulled out liquidity. Um, so it is a little bit of a tough call. And in hindsight, it's easy to now come and say, hey, it was so obvious you should have gone risk off. Oh, it was so obvious you should have bought it. But uh, this is why overall discipline matters. Overall discipline, if you're managing your sizing, portfolio allocation on what assets that you focus on, and and weekends do you do a lot of trades, all of those things, then it gets easier for you to get out of situations like these.
Mhm. Okay. Well, and as I said, we just recorded offline some really good sort of guidelines, sort of a blueprint for how to operate in that volatile environment. So I look forward to publishing that next week. Hopefully, people can take that to heart and think about how to incorporate that into the trading system, especially if we are heading to a period where maybe there is more volatility. We'll just have to wait and see. Ahmed, I want to bring you up here. What are your thoughts on, from a trade perspective, as you look at Bitcoin this week?
Can you see my chart?
I'm actually trying to see. I don't. Let me see if I can change that. Nope. I'm seeing it. Okay, give me a second. Okay, all right. Let's go with it then. For some reason, I'm not seeing it, but I'm going to trust you.
All right. Okay. So last week we talked about this range and the liquidity sitting between 97 and 95. So this was the range that we were looking at when the price was trending around 104, 105. And at that point, we discussed if the price doesn't move up, I mean, if we have to see higher highs, it has to go above 106. Then we can start trading for the longs. But if it goes below this level, then 95 to 96 is a fair shot.
Hmm.
So the next candle that you see, the red candle that you're seeing here, this one is completely reactionary to what happened here. There were loads of resting orders between this range that all got filled. Delta became positive and it ran up. Now it is going to retest that range. But yeah, that's how you have to look at it. This is your invalidation 95. In this case, if 90, the way I'm looking at it is, there is a trade to be had, because if you open up your levels here, the levels that I use every time. So this is your yearly open, and this is your previous week low. So this is all piled up here. Monday mid is there as well. So if 95 or 96 gets lost, then you have a problem. Then there is a lower low coming. This, you can see it as a lower high. If that this gets broken, then you have a lower low coming, and you can clearly see where the liquidity is sitting. There was one attempt at this, second attempt at going deeper into the liquidity, third attempt, yeah, there will be a third attempt to that if this gets broken. So there is a trade to be had. Trade would be basically taking from here, from 98 all the way back to 95. But there, your risk should sit between 96 and 95. And you should not hesitate to cut your trade at 95, because if 95 goes, yeah, then 80, 85 is a fair shot. But if that gets, so this is what I was talking about. If you are not in the play beforehand, right from the start, then basically you have to wait for these candles to basically give you an idea where the market is going, because it can really go down. This can be a lower high and you can go lower low from here, and then 86 that people talked about for a very long time, it becomes a fair shot.
Mm-hmm.
So take it from that
What?
perspective. Don't put 100% of your portfolio in this trade,
Yeah.
because it's not high conviction trade, and you can see how the market is behaving. China is already putting the levies on, so it can turn ugly by 10th of Feb.
We could have some more volatility. What do you know, how do you factor that in? You just obviously teed up some ranges that someone could take a trade on. Is this the kind of week, especially if the last 72 hours, that maybe you say, you know what,
No.
I want to sit it out? Or is this like, no,
No.
actually, this is business as usual. Let's move forward.
Yeah. This is business as usual. These ranges are not that we haven't drawn today. These ranges have been there from last kind of 4 weeks. So these specific liquidity zones, they are not looking at the chart. This is basically going into the order book and
Mhm.
looking at how the orders are moving between these ranges. When I say ranges, basically how the orders are moving between 90 and 86, and then this is, I don't want to talk about between 77 and 74, but there is a movement.
Right.
So you can see the bids, you can call it stink bids, but the bids are coming in.
That's the Arthur Hayes zone is what I'm calling
Yes,
that.
that's a Arthur Hayes zone, but this zone is not unfounded. Consider this, right? When we were here at around 104, nobody said we're going to go back to 80K or 88K, right? So we had one tap at it. This is the first tap, and the second tap, it came in this point. It didn't survive this. So all the liquidity from here is gone. And this is people taking your profits out. So now when this is basically these two candles are your profits that people are taking out from these longs, because they got filled on these where the resting orders were. Now, if these people doesn't come back into the trade, so this is the making of a lower high, and then you are looking at a lower low, and lower low won't stop at 95K, because you want the same set of people who are sitting in this range to come back and start playing ball. If they don't, then you're looking at, there are already orders. I can see in the order book that levels are getting thickened between 90 and 86K. So new orders are coming in, because we can see there are ways of measuring basically where at which levels OI is getting created and where the new orders are opening up. So you can see that on the charts, and that's where these levels are coming from. So it's not driven by just a candlestick. It's driven by other analysis that happens on the side that looks at every single candle and every single new order that comes onto the order book, where it is opening and what the density of those orders are.
Okay. So not the highest conviction trade, but it's still business as usual. You just really need to keep that risk management solid. And it sounds like, I mean, hopefully when I bring up Ben later in part 2, talk a little bit about how you can actually do that, and using Panda as an example. Okay, so let's move on.
I just want to touch on the point of business as usual, right? If you remove the liquidity zones, right, and if you look at the ranges, so we looked at these ranges for like 6 months now. So Monday ranges, Monday high gets formed, Monday low gets tagged, and then it runs up. So if you want to take a trade here, right, from Monday mid to Monday low, you can go, and that's your absolute it. If you see market coming with force at around yearly open at 93K, you cut it.
Okay. And with force, you mean
that's where it is business as usual.
With force, do you mean, is that really just looking at the volume profile of what's coming in? Okay.
Yep. That's where you look at the volume profile and where the open interest is getting created.
Yeah. Okay.
So if you see that, then you know exactly what the market is going to do, where it is going next.
Let's move into another token, perhaps the most hated token in all of crypto today, as it reaches its pre-merge supply. Wow, Ethereum. Oh, how the market hates Ethereum. So this one was interesting, because we've talked on and off. You were saying for many weeks, like, you're not touching this. And again, this is from a trader's point of view, looking at the profile of its price action and really making a determination if it's a good thing to try and trade for profit, rather than any of the more longer term macro or fundamental discussion where Ben really routinely weighs in on it.
Yeah.
Do you think there's a trade now for Ethereum? Is Ethereum in
No
range,
way.
or do you still want to wait for more of a range to form?
Yeah, I mean, I'm not touching Ethereum specifically. You can see, right? So last week, this was a trend line where it was trading at 3,200. And that point, we said this is the level we draw at that point, saying the price has to stay above 3,200 for it to play. But lo and behold, it drops below, and then yeah, this was a liquidity zone from the last week. So again, went through that reactionary, and then you want this zone to held up. If previous week low is lost at 2,700, 2,750. Yeah, we are basically I don't know where ETH is going from there. That's why I'm not touching ETH at all.
Okay. So ETH is definitely not a trade for now. Let's get
Nope.
into Solana. Last I was looking, I was 212, and I think you talked about it. Maybe it was in our previous discussion.
Yep.
Sort of when you're looking to get back into assets after a sell-off, Bitcoin is the premier one. I mean, that's the safest play and still has a good amount of volatility and liquidity. But you also mentioned Solana. Does it look
Yeah.
like there's a trade this week here?
Same setup. It's at a Monday high. You want Monday mid to Monday low to be taken. This is the same setup we talked last week. Again, looking at where the liquidity zones were. Last week we were talking about last Tuesday we were around here. At this point 240, and I was saying we need to wait and see what happens at 190 again. And previous week high gets tagged, liquidity gets taken, and then comes back straight down in. Now this is again a reaction that is coming out of it, right? On a higher time frames, if you look at it. So you have a Monday high formed. You don't want to trade this. Either you trade above 218 or 220, or you trade below 295. This is a chop zone. It can go anywhere from here. And specifically because reason being, this is the resting liquidity here where there is a reaction. So this is all the profit taking that is happening and new orders coming in. So you want Monday mid to come and then layer down to 173 and cut at 173 without hesitation if it fails, because it will go further down if it drops from there. Otherwise, you wait for Monday high to be broken. And basically, it's you're running your highs and then running your lows.
Yeah. I'm just thinking about from a risk management point of view, definitely stacking those bids. Is there anything else from as you said, cut your losses? This is a period of unprecedented volatility. I think everyone's going to acknowledge that, whether you like or dislike the policies of President Trump. There's no question that his actions are likely going to lead to more movements like we saw over the weekend. How do people think about that when they're placing these trades? Just tighter stop losses, wider stop losses. Obviously, less leverage, I think, should be a given.
Yeah, less leverage definitely for a period like this. But what you have to consider is now you are in a period where there is a lot of volatility coming. So the trade that used to have, there were high conviction trades, you might take 2 or 3 goes of making that trade happen now. So you need to be ready to take small losses so that you can make a bigger gain. So don't expect every single trade to turn up and give you 5 to 6%. So if you are ready to cut in 1% or 2 or 3 times and then still make 7 to 8%, then that's how you should see it as. So in this scenario, look at a setup, set it up. If it doesn't play, have a clear invalidation level before going into the trade. And if it hits that level, without hesitation, cut it, because you will get a second chance.
Okay. Good thinking on the risk management side. Benjamin, I know you had your 220, your 200, and your 180 trades on Solana. Did you end up closing those, or are you still holding strong?
Yeah, last week we had the discussion about it, right? So I decided to close that and ladder them back again, and it got filled. Of course, yeah, so that's a good thing.
Cycling through.
Of course, the 180 version did not get filled, which is a good thing. So let's hope. Let's see how it plays out.
All right. Oftentimes we come in with another trade, looking at some of the other tokens. Again, after a sell-off like we just saw, I mean, there's a lot of tokens that have really been, repriced further down. So pretty good sell-off. Aave is one that kind of piqued my attention because it was mentioned as part of the Liberty Financial purchase. I think there were about 7 tokens that they purchased. Aave was on that list. Thinking there at all, I know I have some Aave in my portfolio. Is the DeFi sector something you would be looking at trading right now? Is it really just stick to the majors, stick to the ones we just talked about? Are you looking at any other trades, some of these smaller caps?
Benjamin, you want to have a go?
I would not look at small caps right now, or even mid caps. Honestly, the only asset to focus on right now is still BTC, because it's not just about Aave. World Liberty Financial, I think they also spent like 200, like they bought around 86,000 Ethereum in the past 72 hours.
Mm-hmm.
Ethereum is still trading below 3K, right?
Yep.
There could be fundamental issues beyond what we are hearing in the news or seeing sometimes in the data. When you have lack of clarity, just focus on Bitcoin. That would still be my play.
All right. Focus on Bitcoin. That's the lesson. Ahmed, are you kind of have your weekly trades that you're looking at between Bitcoin, Ethereum, Solana. Would you be looking at anything else or sticking to the majors?
I mean, this week I would stick to the majors.
Okay.
Because there is no clear trend and there is no clear certainty as in what's going to happen next. So you're better off sticking with it.
Yep. Okay. Well, I don't want to make it more complex than that. This is a period, especially in high volatility scenarios, you got to have a game plan, and you want to play it safer than the degens who think that they're going to YOLO and make 100x and lose all their capital. So play it safe, All right, guys. Well, thank you so much. We're going to bring Ben Lilly on here. And definitely, if you enjoyed this, definitely like, subscribe, and be here next week. We're going to review what this looks like and see if the market's changing. Maybe we can have some either more high conviction plays. But thanks, guys. Appreciate it.
Cheers. Thank you.
All right. Ben.
Good morning. Good evening.
Good morning. Good evening. Hello. Was that in the Truman Show, maybe? I don't know, some movie from 3 years ago.
I think it's like good morning, good afternoon, and good night.
Yes, there we go. Ben, how are you doing? I think the last 72 hours was pretty hell-raising for some folks. You still have a nice head of hair, all black and all. How are you holding up?
Holding up well. I've been digging into a lot of fundamentals of late and just trying to figure out where the ball is headed. And if the ball ends up heading over there, what are some of the new protocols, new dexes? I think they're seeing some new innovation that we haven't seen in a long time hitting dexes, which is kind of refreshing.
Yeah.
There's been some nice solutions that have hit the market, and those solutions in my mind have just, what we're going to see, I believe, over the next year is that the efficiency of capital and really the tooling that's available to users at large are actually going to be better on dexes than we'll see on centralized exchange environments. Granted, the execution and the speed and the ability to use a lot of tooling to really manage positions, it's going to be extremely difficult to compete with centralized exchanges on that domain. But as far as, the tooling that is coming, I think dexes are just going to be able to provide, in some certain niches, just superior opportunities, which is good.
Well, I think maybe I speak for a lot of people. I definitely speak for myself when I say I'm excited to see what kind of innovations happened. I don't know where it was on crypto Twitter, but someone was saying, it feels like nothing's happened for months or years now at this point from a DeFi perspective, which isn't true. But I think, when you look back a couple of years ago to the level of innovation, it feels like it's been slow. So it'd be great to see some movement, I think.
I think there's a lot of validity there, right? I think the biggest innovation we've seen, unfortunately, is how to farm points. That's really been the biggest DeFi sort of solution we've seen. And that was Pendle. They were definitely really pushing the frontier on that. And then we've seen a lot of lending protocols and dexes start also using their own points, and just a lot of, even restaking protocols were absolutely dominant in sphere. So we don't see a ton of active validator solutions coming, or services, I should say, coming into the environment. But you can see some of those, pieces of the puzzle starting to come in to help really enable a lot of the work around AI agents. A lot of off-chain validation services are coming. So there's a lot to be excited about. But believe it or not, there's some DeFi innovation that's just starting to hit the market, especially with Uniswap V4 really starting to come to market. You're going to see a lot of development happening on there. And so that's going to really kind of push some competitors to kind of come to the market of what they've been building for the last year or so.
All good things. I'm looking forward to getting to a lot of that. We are going to take a break though today, and typically we'd go through the flow report. We talk through what it looks like for Ethereum and Solana and Bitcoin and what that means for the state of the network. But today we're taking a break from that and diving into something I guess you could say is more tactical, getting into some of the metrics and how to build those, use those on Panda terminal. Is that right?
Yeah, let's switch gears a little bit.
Yeah.
We kind of have a chat going on regarding Panda Terminal. This is a platform that we've been building for past couple of years now. And we do a lot of work when it comes to ingesting data, whether it's off-chain or on-chain, hosting in a database and then running compute on that, and then building a lot of new metrics that really help users make more informed decisions around really whatever they're trying to do. And Panda is sort of our tooling that allows us to really showcase those things, whether it's just internally within ourselves to be able to view metrics and really assess whether, how much signal is there actually in this metric. And one of the exciting parts of it all, in my opinion, is that when you go to a service like Dune, for instance, and you have to go ahead and really manufacture a lot of code to get the layout the way that you prefer it, and you want to see really whatever it is. Let's just say it's liquidity over time on a Dune dashboard. And there's a lot of those, and it's a very useful tool. And you just want to see, like, is the liquidity pools growing? Is it shrinking? Is it, what are the assets that are in there? What's the yield being associated with those pools? And what's the transaction activity? And so that requires a ton of code, and it really limits the amount of users that can go ahead and build those visuals in Dune. But then there's a gap. So you go ahead, you make all those dashboards available, and you can go ahead and monitor on a daily basis. But does it matter? Like, how are you able to go ahead and see how it reacts to price? Because the initial move would be on, say, a Dune dashboard is to go ahead and put the price of whatever asset that you're really monitoring for that pool. But what if it actually is relevant to a different asset? What if it was relevant and it's no longer relevant? How do you really make those determinations on that dashboard?
I was like, really doing the fundamental analysis is a different connotation, but really doing this deeper level of analysis to synthesize price impacts and be able to bring all this. I mean, there's data ingestion, but there's really this layer that seems to be missing, this gap that you and I have talked about offline, but it's really missing that from an analytics and analysis standpoint.
Yeah, well, especially from an analyst point of view, because crypto has a lot of developers that know how to code, and they're great with Python. Seems to be the most dominant language. And let's say you want to go ahead and just do a quick visual to see, hey, I think whenever the moving average does X, Y, and Z, that there's going to be some signal. Like, I can kind of see it on my chart here. And then if you want to go ahead and do that in TradingView, then you have to go ahead and whip up some PineScript to go ahead and see that visual to see if, your hunch is actually correct. And that requires a little bit, of a knowledge curve to be overcome before you can go ahead and start kind of slinging that code out. And, from my experience with Bloomberg Terminal, I miss that thing to death, but there is no such solution that exists within crypto. And a lot of analytics platform, that's sort of their goal at heart, is to kind of be that Bloomberg Terminal. And one of the things that I believe that many that never actually have access to one or have spent, years working with it, there's a lot of speed that exists with that Bloomberg Terminal. And it's the ability to essentially not even need, for a lot of times, your mouse pad to go ahead and make your movements from one area to another. And then the ability to add a lot of different fundamental metrics to just a simple price chart to be able to see it over time, right? That tooling is so valuable to an analyst that just lacks that coding experience.
Mm.
And this is kind of the largest component of what exists in the TradFi marketplace. That analyst is not going to be somebody who's typically a coder.
Right.
It's just not. They're going to be essentially a mouse clicking monkey on their computer. And I'm speaking about myself here. And so no coding tooling is so valuable. And to be able to just rip right through something, to be able to find whether there is signal or not, whether it's something to pay attention to and when to pay attention to it, is such a valuable piece of tooling that we were like, you know what? And this was really, my sort of my angst, if you will, is like, come on, guys, we really need this because I want to dig into the tool. Like, I'm totally being selfish here, but it was like, I need to be able to click my way through this to be able to find the signal, because I didn't want to spend all that time learning how to code. And then even if I did, just, hours to be able to really analyze something. So something quick, you get it in there, and then you can just rip right through it. That's the key component of why we're building Panda itself. And today I thought, what, let's just go ahead and walk through it a little bit.
Yeah,
I noticed a lot of questions coming through the chat of like, hey, how do I go ahead and do this? Is this valuable? Is it not? Well, we can go ahead and check those things ourselves with just really a few clicks to get that signal that we're all really after in the crypto market.
Let's do it. I'm excited.
All right. So I think the first one, let me go ahead and change the ticker. And I know I'm using my keypad here, and I'm kind of going against what I said earlier, but it really, to start off here with Panda, there's a few screens here. There's Workbench, Screener, and Dashboard. And I'm just going to sit on Workbench today, right? And so this Workbench gives you a price line right here, and then you can overlay really any studies that you want to go ahead and analyze on top of it. And one of the studies that we made available here is actually one of our proprietary metrics called ROSI. ROSI stands for Reversal On-Chain Sentiment Indicator. And it's a really just compilation of a lot of different metrics that help us understand whether the market is essentially capitulating at any given moment. And if that's the case, then that would trigger sort of this binary response of yes or no. And if it's a yes, being on here, as you can see, a 1, which would indicate yes, ROSI is flashing. And that's what we saw recently. And you can kind of just eyeball it to determine with ROSI, if it's a 1, that's it flashing yes. And you can see historically just kind of how it has been working out.
So the yes, that the market has capitulated, high conviction that it's going to rebound from here.
Correct. Yep. And it's just really like a lower risk type of entry. Like you can kind of wait to see it hit, and then you can say, you know what, I'm going to start laddering in. And this would be a good time to maybe go ahead and take positions that I was considering. You can move it so that you can actually see it on top of price, if that helps with your eyeball. Change the y-axis to show it up on the right. And now you can kind of see it a little bit better of when it decides to go ahead and give us one of those signals. And it's pretty good. It's very accurate. It's been a very good model for us over the years. And it just flashed the other day on the most recent sell-off.
Now, is it the same kind of efficacy or validity across tokens? Or is there a subset of tokens where it's just going to have a lot more rich signal, more valid?
Yep. So if the metric does exist on a token, then you can go ahead and kind of flip right through it. So we can go to Ethereum, for instance, and pull it up. And ROSI will go ahead and populate just like it did before. And you can determine for yourself, like, hey, there is efficacy, or you know what, this one's not as strong, or it tends to fire too early. So this is for ETH. It tends to have more of the larger cap tokens that have adequate liquidity especially on centralized exchanges with futures markets. So you got to think, if the asset is really traded throughout the ecosystem, then the more it's traded and the more volume, and as well, if there's some on-chain volume as well, then that's going to have kind of a more true signal. Because what tends to happen is some of the smaller assets, like you really have to define what is the main market for that asset. Where does it sit? Which liquidity pool? Which chain? And that is the case when it's not sitting on one of the major future exchanges like Binance and Bybit and others. So you got to kind of narrow the asset class for certain models and metrics. And Rosie is really one of those. Curve token, for instance, it's on here as well. I believe this one tends to fire a little bit earlier than others, but actually it's really good now that we're sitting here looking at it. But like right here, you can kind of see it fired a little too early. Same about right in here, but more recently it's been a little bit more spot on. So you can use this as like, hey, this is, if I'm considering, moving down the risk curve to one of these smaller cap assets, I should say, relative to Bitcoin and Ethereum, it is a useful tool to aid in your decision making.
Yeah, that seems very powerful. And I think that's, there was a lot of questions about people trying to figure out how to add it, how to visualize it. And again, is it useful across varied asset classes, which you just answered, right? So you got to look at it and study it and see if it's giving you the signal you want from a trader point of view.
Yeah. So I'm going to go a little slower this time. So we can go ahead and add it. I'm just going to put it into Bitcoin just to make it a little bit less zeros and ones here. But so you got your ticker of choice. We have Binance here. So where are you going to actually find it? You can find it under studies. You go ahead, you open that up. Let's say you're just in this generic study library. You can go ahead and in the search bar right here, just type in Rosie and you should see it. This one, I believe, is under our models. If you want to go ahead and click your way through it and go ahead and you just select it. You could favorite and it'll show up always at the top of your list. But now you can see, I have 2 active studies here on my dashboard. I got the volume underlay, which is the bars right here below price. And then I also have Rosie, and I can turn that off if I don't want to see it at a certain time, or I can open back up. And so this is just a way to go ahead and bring a metric on there, and now you can see it relative to price. Now, the view I had before where I took this Rosie metric and dropped it on top of price, granted, you can see on the y-axis here, Rosie is either a 0 or it's a 1. So if I put it on the same axis as Bitcoin, it's not going to show up because it has a much different scaling. So if we want to go ahead and we're going to move it on top of price, you can go ahead and put it into panel 1, which is where price is. And you can see we don't really see much happening. It's right there at the bottom. It's just kind of sitting between 0 and 1. You don't see the fluctuations that you saw before. So you have to add in that second y-axis. So just open up a new one. You change the y-axis. I want this Rosie one to be on the right side of the existing one. And there you go. You can kind of see it's got its own scaling now, sitting nicely against Bitcoin. Now, we'll go ahead and move it back to where it was, put it into a new panel, and it's back on default y-axis. And that's just the first sort of step to go ahead and decide, okay, check out a metric, looks pretty good, but how do we go ahead and actually add a little bit of kind of a new layer on top of price to really evaluate exactly what candlestick, because this one's simple because it's just a 0 or 1, simple to see. Right? It's not too complicated, but we're going to start here just to make life easier. So you want to create these little visuals that are like events. When an event gets triggered, it will populate on the price chart, and you can decide what populates there. So this is called Panda Intel. And so what we'll do is we'll make a new one. And so the study you want to pull up here is Rosie. So we'll type that in. All right, and we have that here, Rosie. Don't worry about it showing up here. It'll go away as soon as I exit out. So we have Rosie here as our study. And so what are the parameters we want to set, right? It's either a 0 or a 1. And so in this case, we want it to basically put some sort of event flag on a candle whenever Rosie registers as a 1. And so for there, we'll put whenever Rosie is equal to a value of 1, we're going to have either you can paint the candle, you can put a little emoji if you want to, or you can kind of just put a basic chart marker. And so in this case, I like to always simplify it. So if we're trying to, if the signal is associated with a buy, then I like to just put a green bubble. And if it's a sell, then I'm going to register as a red bubble. And that just, in my mind, keeps things a little bit more organized on a chart. And so in this case, I'll go ahead and you can do a circle, square, diamond. This becomes helpful when you start to layer in a lot of signals on top of each other. So we'll keep it basic with a circle. In this one, let's say, you know what, we want, R for Rosie. Make it whatever size you want to. And then because it's a buy, I'm going to put it below the line right here. And that's about it. And because this is just a test for Rosie, I'll go ahead and put that there. This description is helpful if you want to share it with individuals so that they can understand, what is this intel that you're adding. The intel here tells us when Rosie is firing. Okay, pretty simple. So I go ahead and save it, and it just quickly adds the bubbles whenever the event registers a 1. So you can see as, 1 day too early here, maybe if I actually were to open this up, it actually is it's right on the wick there, but you can see now a much more specific view. And believe it or not, I can actually remove this now and it'll still stay there. So now I just cleaned up my chart. I can see like how valuable Rosie is. And, now you can act on it, open it up and go away.
So Ben, I'm curious of all the features, you just walked through a ton that has gone into Panda. Was there a single feature that you were like, I've got to have this, and you worked with the development team to bring into Panda?
Yeah, that has a lot to do with, it might even be here today, and I haven't tested it. So if it's there, I don't really want to pull it up, but it did not get pushed this morning. But
okay,
there is a metric on token usage that I'm really adamant about. It actually sparked development for our on-chain work a couple of years ago, and it really just has to do with like where are tokens in the ecosystem. So where does ETH sit? What protocols is it on? How much ETH is sitting in Lido relative to its total supply? How much is sitting in liquid restaking token uses versus the amount of supply? How's liquid restaking tokens looking compared to liquid staking tokens? How much is sitting over in Aave? How much are sitting in various bridges, kind of letting us know how much ETH is moving off of mainnet and actually getting used in other ecosystems? And the reason behind all that is because as we started to explore on-chain data and on-chain metrics, it became very just in our face that the way that a token gets used ends up kind of leading to how it moves whenever there's a change in demand. So if like the token starts to get used more and more on chain to all of these really good use cases like lending and staking that really make that token illiquid, whenever there's a change in demand that shows up on the network, then price is going to respond a lot faster, a lot more velocity. And as well as when the token usage starts to decline, right now it's is more receptive to a downward move whenever fees start to dry up. That in part, if anybody here has been listening to the flow report over the last few weeks, it's kind of been, the good, the bad, the ugly. There's been a lot of ETH getting unstaked since mid-December. And then we've also highlighted the amount of ETH that are getting used in the Athena protocol, which is essentially opening up a sell on each unit of ETH that moves into that ecosystem. And all that's highlighting is that ETH is much more responsive to a downward move than an upward move right now. And the market really just showed us that over the last week, that, demand has been dry, a sell event did take place, and because of the way that the token gets used on chain, it's not in this position to really absorb any sort of selling activity. So that's kind of what happened. This is also really beneficial for when you see a token getting ready to go into this sort of high token growth phase, when there's either a lot of unlocks happening, vesting is sort of ending, or you see that a governance proposal came into play and they're saying, you know what, let's up the emissions and we're going to bring some of those emissions to the treasury to help fund development. Right? That's a pretty standard sort of item that gets voted on. And when you understand that, you know what, it looks like about, let's say, 20% of this token supply gets absorbed across DeFi. That's a really big number, by the way. Like 20% is unheard of. But let's just say that's the case. That means for every, 10 tokens that sort of gets emitted from the protocol, 2 out of 10 are likely to get used across the ecosystem. But then what's happening to the other 8 tokens, right? They're probably entering the market. They're entering into supply. And if there's going to be any sell pressure that shows up, right, that's going to really be sort of negative beta that exists in the marketplace. And so that's how understanding, how a token gets used, that if there is new supply coming into the market, that, nothing, it's not getting used like you would think. So the fact that, that's the government proposal that's being discussed, like that other half of where the token goes once it enters circulation, I think it's a conversation that's really just not taking place. So in some ways, ideally, just understanding how a token gets used, at least for governance discussions, hopefully this is a good tooling to help really create more educated conversations around what could happen to a token's price.
Yeah, it's interesting to hear you unpack it, because I think myself included, I can be as guilty as anybody looking to pull in a bunch of these metrics and just attach them to the chart and make sort of simple decisions, which ultimately is what you want to get to, is being able to make some decisions, determinations on your educated understanding of where price may move. But there's a lot of thinking that goes in behind them, and the understanding of what they may be trying to tell you, and then be able to combine them with other metrics, right? So for example, if I'm looking at Rossi as one example, would you combine that with something else to give you a fuller picture of where this might go?
You can. Anybody in the chat that was watching some of the posts over the last few days, we went ahead and made some posts on, what do the books look like? Because a lot of the market likes to look at these really, they're just eye-catching, these kind of liquidation charts. Like, where are all the liquidation pools sitting? Where's the high leverage traders sitting? What is this price level? And somebody asked me, like, why don't you have that on there? And the main response was, look, you can't really test how much signal sits in there. Like, you can't really go back in time, pull up an old chart and this would be manual if you end up doing it. You want to go ahead and see, what took place back here, when the president was elected in November, and we see that price just broke through and just ripped higher. Where were the liquidation pools sitting? Were they up here? Were they up here at 98,000? 88,000. When it broke through, did it rip right through sort of like really high leverage traders here at 74,000? How do you test that? Right? How do you test if that's a reliable metric for your trading needs? And that to us was, we've had actually that metric in Panda, but then it sort of just lacked that sort of continuity of like, hey, individuals that want to test alpha, like they can't really do that there. So we went ahead and brought the bid-ask ratio into Panda really for that reason. And what was interesting as I was kind of going back and forth on some charts and explanations was that one of the really helpful sort of indicators that we ended up finding was that when the orders that sit very far away from the current price sort of are skewed the other direction. So if price is coming down and then all of a sudden you see there are a ton of bids really far away from the current price, it's telling you that, if price wants to go find liquidity, then it kind of needs to reverse back higher. But how do you determine when? When is price actually going to reverse higher and go seek out that liquidity to the upside? And so you can actually layer in, say, what does the book look like very close to the current price? And so as that starts to flip and price starts to come down, and all of a sudden you now see the bids start to show up very close to the current price, and then you look at the second version of that bid-ask ratio saying there's a lot of liquidity to the upside, it's telling you now it's happening. Now the market is transitioning from sort of this really sell-heavy environment. Bids have come in, they're starting to put a floor in, and now you have liquidity to the upside. And so if you can actually, and what we ended up doing was layering in those sorts of Panda Intel bubbles that you really just saw with Rosie there. We started layering them into bid ask, and it was nice to see that, we kind of learned a little bit more about the market by just being able to go ahead and play around with it in this environment.
So this is definitely a way to be able to synthesize more information, be able to combine these metrics. What about from a trade execution standpoint? Do we want to look at all of that today? Because I know there were some questions about not wanting to time the market, and something that Panda has the ability to integrate with trading directly, right? Where you can study, you can synthesize, you can analyze as an analyst, but then also be able to execute trades as well.
Yes. So the execution part of Panda is really best in class. We don't talk about it enough. Amit, who was you were talking to before, that's one of his specialties. Like I can go ahead and ask him like, hey, how quickly is an order going to run through it? Or if I automate it, like how quickly is it going to compute the order, layer in the orders and execute on those orders? How many milliseconds? And he'll give me an answer, just, snap of his fingers. Like that's what he does. And I know he doesn't talk about it a lot, but that's where he spends a lot of his time building the infrastructure to have some of the highest execution times that you can have. But what a lot of individuals don't know, and this is what makes this really special, is, especially with our autonomous execution software and trading service, is how do you go ahead and let's say a metric starts to show that it's a buy, the system starts to register as a buy, and now the system needs to go ahead and compute across various accounts, how much is in each account, what's the order size, where should the order be, right? Because not every account has the same amount of assets in its portfolio or in its sub account or even wallet for the on-chain solutions. So how does it determine what amount to place at what price? And many don't realize, like, you go ahead and you go into TradingView and you do that. And you want to automate a signal there. It takes like 7 seconds, I believe, is the amount for the metric to go from hitting a buy signal and the system's running that computation, packaging up the orders, finding how much is in your account, seeing where the current price is on that exchange, creating the orders based upon your metric and your parameters that you set. That whole process of back and forth does take a long time.
Mm.
And a lot of Emit solutions have been on the compute side to go ahead and bring that down to like sub-second times. And it's
Wow.
really impressive. And that's really why, autonomous execution, like not many are doing it the right way. And a lot of the off-the-shelf solutions where you can go ahead and you can subscribe to like this strategy that might exist on this platform for, I always want to automate a DCA whenever this happens. All right. That strategy right there, you will lose seconds on it for sure. But that's not their specialty. And so that's what makes kind of what we offer a little bit different. But as far as walking people through, I kind of want to just sit on the studies portion today. So anybody that's listening can really understand, how to go ahead and bring up a study and then just put that first level of intel. And then maybe next week, what we can do is we can bring a metric in there and then we can start to manipulate it with, say, putting a moving average on a metric. Let's say you want to bring like gas fees, for instance. Gas fees are very volatile from day to day at times. So you need to smooth it. So how do you go ahead and you smooth it? In Panda, we can show you that. Then once you smooth it, how do you go ahead and determine, when to go ahead and execute or not to execute? But got to get the brass tacks first, in my opinion.
Okay. Well, I think this is a really then good intro for those who are in the Panda chat who are looking for some answers to how to think through, how to use the studies to start to analyze and look for possible pockets of alpha you can trade. If you're not familiar with Panda Terminal, maybe you came across us on YouTube or on X, we'll leave a link in the description. The platform is completely free to use, to access, to be able to look around. Join the Panda chat. You can be around other traders who are looking to do the same thing as you, which is to find those pockets to be able to trade profitably using a lead class solution that is being rolled out. I mean, you guys have rolled out a lot of the capabilities, but I know you guys have more in the pipeline that's on the roadmap. It feels like you guys are constantly talking about new things you want to add to it.
Yeah, there's been a lot of things that have been worked on, and then we kind of use it in a test environment. Like, it could be better. So we kind of put it on the shelf and kind of push forward something that we've been working on instead. And then we bring it off the shelf and then we kind of get back to work on it. And there's a lot of things that like, it just doesn't take a lot of more time and effort to bring it back into Panda. We just want to make sure it's done right. And, one of the more exciting ones I know is coming. And even that one, once we get it through, we're going to do some iterations on it and refine it even further and allow you to go ahead and set up custom dashboards and screeners and all sorts of things using it. And then, down the line, you'll be able to create an alert system for, let's say, whenever, we have ETF wallets, for instance, and you want to go ahead and see whenever an ETF flow happens, and you can kind of set those parameters and trigger those alerts. But yeah, so
more to come.
That's a lot, right? Like, we'll take baby steps to get there. Now, I think one thing that might be helpful is because RSI is such a popular metric that gets used through the ecosystem, and a lot of people like to talk about divergences that get formed. Like, those are the things that you can actually test here and determine, like, okay, so a divergence is forming, which would be like a higher low on the RSI. Actually, let me back up and actually pull up RSI before I start talking about that. But again, you're on the workbench screen. You can go ahead, click studies, go ahead and click studies library. I think you can even go into, which one is it under? We're going to clean that up, but let's just go ahead and type in RSI. There it is. And it just applies RSI on your chart. And so you go ahead and you're looking at RSI and you say, okay, yeah, it's pretty high up here at 80, but price continued to rise. And this is what I'm talking about, divergence, is price continues to rise while the RSI starts to drop. That sort of thing you can set up using Intel to determine when to try to time that top, right? Like even back in here in March of 2024, RSI peaked, but then it still took another 2 weeks before we actually saw the top in price form. And by then RSI is coming down with lower highs, right? That's that divergence we're talking about. And maybe next week we can talk about how to set up the divergences. But for today, we'll keep it kind of simple. We'll just say whenever RSI gets above 80, because you can see it's doing it a couple times right here on the daily. So you go ahead, click events. We want some new Panda Intel. And we want to go ahead and look at RSI. So we pull it up. And you can, if you want to, if you're one of those individuals that like to really customize your metrics, and maybe you don't want an RSI that's based upon a 14-day, and you want to move it down to 10, you want to move it to 21, and you want to change when it's overbought, oversold, similar as TradingView, you can go ahead and do so. And then whenever it is greater than, so we'll select the action and the conditions here. So whenever RSI is greater than a value of 80, then we'll get a big scary red thing to tell us, you know what, maybe we should sell. We'll do R for RSI, put that above the line. RSI overbought, and we'll actually do oversold as well. So we said 80, and if you kind of eyeball RSI, whenever it gets around 20, 25, 30, we're kind of seeing these bottoms put in. So you can actually do multi-conditions. So you have RSI is greater than 80, we're going to get a red bubble. We'll add a condition for an OR that whenever RSI is less than, I'm going to put 30 here, then we're going to get a green bubble. Same thing, we'll do an R, we'll put that one below the line. And description, again, you can add your description if it gets a little bit more complicated. When you start adding in a lot of intel, it's kind of helpful to have that there. And it's helpful for if you start to share for others to see what is your intel all about. And so now you see, you can go ahead and you can see whenever RSI is above 80, it's just going to register as a bubble. And whenever it drops below 30, you have a green one. Pretty good.
Yeah.
Right? It's a pretty good way to go see how to use RSI. Yes, you're kind of missing up on some upside on the bigger moves, but on the lower moves, it's working pretty well. At least on the oversold ones, it's working pretty well. I'm kind of surprised it's not, RSI is not doing anything lower at the moment. It's kind of frightening. But
I think there was a comment in the chat. Someone was mentioning that well, at least the Rossi chart was a little bit frightening. I'm not sure if it's because the aesthetics are more just the waiting to really get bottom confirmation. Maybe there's something here that's also frightening.
Yeah, Rosie can definitely have multiple triggers. So if there was another downside event, then it could trigger again. We've seen that before.
Yeah.
But it had a really good interim. If we do form a new low, right, we definitely had some good price action over the last 36 hours that kind of confirmed that the signal was valid. But we definitely could have another one, right? It's not your end all be all. Right. I don't think that exists anywhere in the market. Even though if you sit on crypto Twitter, you'll probably find out that, you know what, everybody has the perfect indicator ever. And it's probably just 2 moving averages, but we'll, it's okay. People have their metrics and indicators that they love, but this is RSI. Simple way to go ahead and use, a metric that you probably know very easily and go ahead and add some intel on top of it. And then maybe next week we can get into some more complicated stuff and eventually even get into like fundamentals like gas fees, for instance, on how to apply that and see if something that most of the market ignores. Remember, where's the best alpha? Best alpha is found in little niches where nobody else is looking. And so if you can go ahead and you can pull up some metrics that you don't see talked about, You pull it up, you can find some signal. Well, you probably found something that most of the market is just not paying attention to, and you are. And this is a good way to go ahead and check it out.
And then you can share it with other people in Panda and battle test it, so you can really see if you can test out some of your theories as well. I think that's another reason to kind of join a community. It's there's such a tendency in this space for traders to be lone wolf, and while you don't want to be leaking all the alpha because you think you found something, there's a better likelihood that someone else is going to strengthen your thesis and make you a better trader if you're willing to share it.
Yep. And that is in part why we're doing a lot of overhauling on the community tab within Panda. So be sure to, get involved now as you start to see that tooling roll out. And the whole idea there is if you are looking at, let's say, certain AI agents and you want to track pools and you want to find signal in those pools, the whole idea is to go ahead and create communities around similar interests and really learn how to use the intel to find what you want, share ideas, and sort of collaborate, at least in these initial stages, to go ahead and learn how to use the tooling and find the most alpha from it. And more to come on the community front over the next couple of weeks as well. We're taking in a lot of the feedback that we've been hearing from the community. If you want to, sort of gear this product towards some of the ways that you like to use it, or you see that could be valuable to the way that you like to look at the market and find signal yourself, just let us know. This is a way to build a community up to go ahead and use some tooling to make them better traders.
Absolutely. All right. Well, I think with that, we'll wrap up today's show. Again, apologies on the front end. We had some technical difficulties, but hopefully the rest of the show brought you some good insights, something you can think about as you head into this week in terms of trading, or maybe sitting on your hands and waiting for the market to come to you. I'll leave you with the same PSA every time. Have some dry powder. These opportunities, especially if the volatility starts to pick up, you're going to like having that dry powder. And when you're using tools like Panda to find some new alpha, you'll find some new trades and want to have that dry powder. And be excited once we show you how to connect Panda to your account so you can be doing some of that trading. But be good and safe out there. Let us know in the comments what you thought, what's on your mind from a trading perspective. This is Marconi White signing off.